All right, everybody. I am on with Tod Mershon of Union Home Mortgage right here in New Jersey. And I wanted to hop on this call with him real quick because there's a lot of hesitation in the market for sellers with the way things are going right now. Because if they sell their house, they have to find something to buy. And it's been extremely competitive. And I wanted to chat with Tod about this because he has a very, very unique and amazing loan product. So, without further ado, Tod, I guess this is really the question. I understand that your company offers a proprietary bridge loan that can help qualified people move forward and make an offer on a new home with 20% down or more and no home sale contingency. So is that my understanding correct?
Yeah, completely correct. So, the biggest problem sellers are facing nowadays is they're afraid to put their house for sale. Obviously, with the superheated market, probably going to sell it super fast, but they're worried about, being able to find anything else and get a contract, being stuck, homeless. So to help prevent that, our owner created a portfolio bridge loan. And for those who remember the old bridge loans, the bridge loan in the past, which they pretty much stopped about 15 years ago, bridge loan was a third mortgage between your old property and the new one, and you had to qualify for all three of them. So it wasn't highly used and it was hard to qualify, plus plenty risky for the lender. So this bridge loan, the way our owner created it is basically we will do a pre-approval for a seller. Their only cost is $375 for an appraisal to see what their home is worth. And we'll take them up to 80%, assuming qualification, of the value of that home. So let's say they own a $500,000 home, we can take them up to 400,000. So let's say they owe 300 on their mortgage. There's normal New Jersey title costs and an appraisal and a $500 administration fee. So as a rough example, you'd have about $4,000 coming off of that total. So 100 becomes, in that example, 96,000 in cash they'd be able to take out of their property. The key to this bridge loan versus any other option in the past is that payment on the new bridge loan, we don't take it into account on the new regular Fannie Mae loan you're going to do. So we pre-approve the buyer then to go forward and make an offer with at least 20% down. So hopefully the proceeds they're taking out of the property gives them 20%, or with their additional savings and or gift money. If they can put 20% down on the new property and they have a 720 or above credit score, which is good, 740 and above is excellent. If they can do that, then we can pre-approve them to now make an offer going forward, not contingent upon the sale of their present property, which is key, as you know. Any offer you make right now with contingency is really handicapping your ability to get a contract. So we will get them pre-approved for that for $375 appraisal fee. And then now they'll be able to make an offer with 20% down and no sales contingency, assuming they qualify.
Yeah. So with some nominal fees and the way that the program is product is structured is that they're able to pull out use the equity in their house to put it towards another house without having to be homeless in the interim, is basically kind of what it allows these people to do.
Yeah, and timing wise, one other example right now is, so we get them pre-approved, they go forward, they make an offer and they get accepted. So now they have a contract on a new purchase May 31st to close, let's say. Mm-hmm. So the next thing they're going to do, obviously, is list their property for sale, since they now have a contract. Chances are, with the market like it is, you'll have a contract in a very quick time. You may be able to close them at the same time and never need the bridge loan in the first place. So that's one scenario that we're seeing a lot happening. But even if you need it, we would set up the closing for your bridge loan the morning of the day of your purchase. So if you're going to close May 31st, in the afternoon on the purchase, you close on the refi, the bridge loan, in the morning, immediate availability to that money. Your lawyer uses that money for your down payment on the purchase. Neither mortgage, the bridge nor the new mortgage in that scenario, is even due till July 1st. So you still have, in that example, just timing wise, so customers understand, you have all June still to sell the house if it doesn't sell on time before. And not ever make a payment on the bridge loan.
Yeah, that was one of the things I was going to ask you, because that's a really important piece, because a lot of people who are hearing about this might be saying, well, what if I have to make two payments? But the chances are, the way things are going right now and the way that the product is set up, is that chances are that probably won't even have to happen at all. So
Yeah, and honestly, that's what we expect, and we certainly, aren't expecting customers in almost all cases lately to make more than one or two payments.
yeah,
That's it. So, and the way the payment is set, just real quick, it's very simple. It's 8% simple interest, which sounds high, but when it's simple interest, it's not high at all. So if you have a $400,000 loan, back to our example, 8% is $32,000 a year. Divided by 12, it's $26.67 a month that they're paying. So taxes and insurance, they pay themselves. So as long as it takes, they keep those up themselves. It's not an escrow loan. And that's pretty much it. So, if they have to make a payment or two, it's not that expensive, honestly, for, carrying through.
yeah. That's and guys, if you're seeing this, one of the reasons why this is such an important product for sellers right now is because when you're selling your house and you're going to be buying another home somewhere else, if there's competition where you have other people that you're submitting offers that you're competing against, the sellers are probably going to take any offers that have home sale contingencies and set them aside. And this product allows you to not have to do that, and it makes your offer look much, much stronger to any seller for homes that you're offering on. So that's really, really why this type of product is so important. I'm glad that it's back. And yeah, it's just great. So Todd, what I'm going to do is I'm going to include everybody's information, or your information, in the message here. So I'll, your phone number and your email. Is there any other ways that people can reach out to you, or if they wanted to find out other info on the product, that they can get in touch with you aside from phone or email?
Best is always just call my cell, but I can always have you forward the My UHM app as well.
Okay, awesome.
My UHM app is very easy to forward to them. It also lets them, during the process, if they ever go forward and actually get a contract and we start the loan, they see the status the entire time. They can have a group chat with us. It's a very handy app. People love it.
Yep.
And that's where they upload all their documents too.
Perfect. Yeah. And guys, Todd is an extremely well-knowledge, really reputable lender. He's one of my go-to lenders whenever people ask me, do you have anybody who can provide a mortgage? Todd's one of the people whose names I give out every time. So highly recommend him. Very, very great product, great service. So can't recommend him any more than that, which is a great recommendation. All right. So thanks, Todd. Thanks for coming on, and let anybody know if you have questions, just feel free to reach out to him.
Thanks. Have a great day.
Thank you.